then you have to do the tax com for IHC. Yeah, so you have to follow that computation. Okay, so before we go into the definition of ISC, so what we are going to look into this topic is that number one is that you have to understand the definition of ISC, because in order for you to decide what an ISC is, you have to see the definition. All right. And then once you know the ISC, of course, you want to look at the tax treatment. All right. So I have actually made some roughly. All right. If you want to look at the overall picture of this topic, all right, it's a company. Then you have to first look whether the company is ISC or non-ISC. If a company is a normal company, then you just do the normal tax com for company lah. All right, whereby we normally start from profit before tax. All right. PBT, and then you do your adjustment or plus or minus, then you come to your adjusted income. So everything goes to your chargeable income. So this is a normal company. But if a company is an IHC, right, then you have to see then how you know whether the company is ISC or not. Then you have to look at what is the principal activity of the company. If the principal activity of the company is an investment holding, then all right, plus, all right, you must do the test, what we call the 80% test. All right, ini plus ni ya, bukan not. Yeah, you have to do both. So it means that ISC must fulfill these two conditions. All right, number one, it must have a principal activity, which is holding of a company. The other one, you have to run the test, the 80% test. Yeah, if fulfill these two criteria, then the company is an investment holding company. So once a company is an investment holding company, then you have to check further whether the company is a listed company or an unlisted company. Alright, I dah terbalik ni. Sini unlisted, okay, and sini is a listed company. Okay, so whether company is an unlisted means that the company is a investment holding company, not listed. Alright. But if it's a listed in a Bursa Malaysia, then the ISC, we call it as a listed ISC. And the computation whether a company is unlisted or listed is also different. So then you may have a question on ISC whether a company is unlisted or listed, because the tax com is different. All right. So generally that's how at the end of the day you want to compute what? The chargeable income of the ISC. Right, it's always going back in chargeable income of the investment holding company. So far, so okay? Okay, generally when we say that holding, investment holding, yeah, so we are talking about investment. What is the income under investment? Means that, right, you generate income from investing. Give me idea. Give me some of the income which is from investment income. The one that we normally refer to is under section 4C and under section 4D. What is under section 4C?
Interest.
Anyone? Dividend, interest, and discount. What about 4D? Rental,
royalty,
and
premium.
Okay, so when I say that investment, it means that your income is from section 4C and 4D. So normally, all right, when we refer to investment, you invest, all right, you hold that, all right, that's why namanya holding. You hold the investment in order for you to generate that income. Example, if you have shares in a company, in order for you to derive your dividend income, you have to hold that shares, isn't it? So, that's why namanya holding, investment holding. So the company, all right, the income is derived by holding the shares of another company, then you derive your dividend income. Similarly for your interest income, how you derive your interest income?
Deposit.
From fixed deposit. So means that you have your money, you hold your money in a fixed deposit, and from there you derive your interest income, isn't it? or there could be you invest in somewhere else, but the money is there. So you hold the money somewhere so that you derive your interest income. When talking about rental income, how is that rental income is income from holding?
They buy property
And then
and then they rent it to others and receive an income from that.
yeah, so you have your property, you hold your property, isn't it? You rent out your property, then you receive your rental income. That's why income from rental is income from investment of holding. Yeah, you hold your properties, but at the same time you generate your rental income. It's different from another where we talk about property. In this case, you hold, all right? But we're talking about investment dealing company, all right? Company that deals with investment. How is that? For example, you talk about shares, all right? If you're talking about investment dealing company, right? Investment dealing, you deal, all right? So it's different from investment holding. How is that different? Any idea? We're talking about shares. How is that investment holding is different from investment dealing company?
I think dealing is like a broker.
So it means that what do you do? So how is that your income? How you derive your income then? If you're talking about investment holding, income is from dividend. But what about investment dealing in shares?
Services,
No. No, none of you play shares, ka?
I think
No,
it's I
the-
running a daily business.
How? How
It's like
is it
trading. I think it's like trading shares.
changing? What changing?
Trading. I mean, you don't hold on to the shares, but
Right?
you.
What do you mean by trading?
Trading is like it happens on a daily basis. Like you buy
You
the
buy and
share.
sell. All right.
Yeah,
So
buy
when
and sell.
talking about dealing, you are buying and you buy and then you sell. You buy and then you sell. So when you buy and sell, it means that if you have shares, you buy at, for example, 10 ringgit per shares, and whenever the price increase to 12 ringgit, you just dispose the shares. So the gain is actually from the difference between your buy and your sell. So you ada gain of 2 ringgit lah. So in this case, it's a gain. So that's how you say investment dealing. You buying and selling of shares. So by investment dealing is not, it does not fall into this category of investment holding. Yeah. So if a company is an investment dealing company, then it's normal company. All right. So you go for taxcom under the normal that you have already done all this one. Right. But talking about a property, you can also have investment dealing company with property. So what happens is that they buy a property at a certain price, all right, and then they do, for example, you're talking about those new houses. You buy from developer, for example, maybe price is 400,000. All right, then you pay interest for a certain period during the development of the business of the property. Okay, and once the property is ready, then you get the key, and from there, all right, normally the price of the property will jump. All right. So once the property is ready for move in, all right, then you can actually suddenly initially the price was 400,000. You can easily sell the house. You don't do anything. You can sell the house for 600,000. So in between the gain of 200,000. All right. So kalau in terms of property, this one we call flipping. All right. Flipping strategy. You buy and sell. Sometimes some other people, what they do is that they buy a very old house, all right, and then they do renovation, add value to the property, and then they can sell at a higher price, all right. So these are the kind what we call a business dealing, investment dealing. So you buy property and at a certain price, and then you sell at a markup, and normally the period is a very short period of time. So that's why it's called investment dealing company. All right. So they gain whatever gain, because in this case, you're talking about even though you buy property, remember last time we talked about RPGT. So in this case, the company buying and selling, the disposal of the property does not attract RPGT, but it attract income tax. Why? Because this one is a business income rather than one of disposal of your property under like a normal individual, right? Or a company can also dispose, but looking at the nature, in this case, buying and selling of properties is a business to the company, for example. So in that case, the income will be taxed under income tax rather than RPGT. Okay, can you see the difference between investment holding and investment dealing? So dealing is assessed under income tax, but holding is assessed, yeah, it's still under income tax, but this one is under section 60, right? Section 60 of the income tax, investment holding company, right? Any questions so far? Yeah. So what we are going to look at is that first, number one, we are going to look at how you're going to decide whether a company is an ISC. All right. Then we're going to see that if the company is ISC, then is it listed or unlisted? If unlisted, how is it tax count will be? If the company is a listed company, how the tax count would be. All right. So first is that let's look at the definition. All right, here we have company. Okay, the definition of investment holding company. Okay, so this one is very important. Okay, investment holding company or ISC means a company whose activities consist mainly, you must look at the term, the main activity is holding of investment. All right, and then you have a very important word here, and. All right, it means that you have to fulfill both. Not only company is mainly holding of investment, but not less than 80%, yeah, of its gross income other than gross income from a source considered a business of holding of investment, whether exempt or not, is derived from the holding of this investment. Yeah, I think that this one is very, the second part, right? I don't even understand what it means by gross income other than gross income from a source consisting of a business of holding of an investment, whether exempt or not, is derived from the holding of those investment. But let's look into the example later. Yeah, then you see what does it mean by that 80% here. Okay. A business of holding of investment means a business of letting off. Letting means that renting. All right, you rent a real property where a company in any assessment provides maintenance service or support service in respect of the property. So in this case, it's different because you say that business of holding of investment. Yeah, so it means that you have a business. So the holding of investment is a business to you. Right, but for example, if I say that as an individual, for example, all right, holding of investment is not, it's just that it's for personal hobby like that, all right, it just will be assessed under section 4C under income tax, huh? All right, it will not be taxed under, because my main activity is not holding of investment. We're talking about individual, right? But if your main activity of your business is holding or investment, then you may fall into this category. Yeah. All right. And then you provide maintenance service and support service in respect of the real property. Letting of real property means granting the use of real property occupation, means that you're renting. All right. Under term of contract, include letting out a part of the real property that is owned or rented. So when talking about maintenance service and support service, should be comprehensively provided. Okay, so why we have this? Because remember that under rental income, right? So rental income here, you can have two types of rental income. All right, rental income can be assessed under section 4A. It could also be assessed under section 4D. How does that A and D different? What would make a rental income assessed under section 4A?
Main business.
Like 4A is main business for rental.
Business for rental. On top of that, right? Not enough. That one is not enough. I have a property, I rent it out, right? How would I say that the income from my rental is assessed under section 4A or is section 4D? What make the difference?
Maybe you own the building, but you rented half of it to another company to use.
So that one A or D?
A.
Wrong.
80% of the gross income of the business.
Wrong. Then general, before we go into ISC, this one is your tax 1 punya knowledge. Whether rental income under 4A or 4D. Ha.
Rented out for investment.
Still, kalau you cakap rental out for investment, it will be 4D. How could I make my rental income under section 4A?
For the intention?
No.
Oh, you provide maintenance to that building.
Siapa jawab tu? Wong.
Wong.
Very good, Wong. You must provide comprehensive maintenance and services kat sini. Apa nama dia? You must definition of business. Mana tadi? Maintenance service or support service comprehensively and actively provided. Alright, when you talk about maintenance, support services, and this one must be comprehensive and what apa term dia tadi? Comprehensive and actively. Yeah? Okay. So if you provide the maintenance and support service, then the income, rental income will be assessed under section 4A. Alright, and when talk about support service here, maintenance support service, you have to look at the definition of the maintenance support service. It means that you, alright, on top of providing the rental, you must also provide services and support comprehensively, which include doing generally all things necessary, for example, cleaning service or repairs, for the maintenance and management of the real property, such as structural elements of the building, stairways, fire escape, entrance and exits, lobbies, corridor, all these things you have to maintain. Who has to maintain? The owner of the property, because you are the one who actually receive the rental income. So you have to provide all this. Katalah you punya property tu, and then the tenant say that, okay lah, ada I need repair of the lights ke, or any of the sink ke, whatever, you have to attend to that. Not only that, alright, anything to do with the buildings of the property, alright, will be under your responsibility. Alright, and doing generally all things necessary for the maintenance and management of the exterior parts of the real property. Playing fees, all these things is under your responsibility. Alright. However, it say that if a person only provides, you only provide security control, not enough. Right? So if only provide security only, no, that cannot be under section 4A. So why is it so important for you to decide whether it's under section 4A or 4D? As a taxpayer, if you have income or rental income, you want their rental income to be assigned under section 4A or section 4D? Generally, rental income under section 4D, right? Generally. But you can provide it under 4A if you have the MSS lah. But why is it so important you want to have your 4A income? Why is the benefit of having income under section 4A?
It allowable expense and losses can be deducted.
Very good. All right. More expenses is deductible. And then you said that if it happened that, for example, you have a loss, adjusted loss, that adjusted loss can be used to set off against your aggregate income. One more thing about rental, about 4A, what can you claim? What's so important? You have expenses is more generous, right? So you can claim, actually this one expenses the same, is under section 4A or 4D. And then you can, if you're having a losses, start dah. After some time dia macam, tadi dia okay je kan? Behave well. Okay, expenses 1, number 2 is losses. means that if you have losses from your rental, the loss can be used to set off against your aggregate income. So as a result, you have a lower chargeable income, so you pay lower tax. On top of that, all right, if you have under section 4A, you can also claim capital allowance. Yeah, so whenever, for example, property, you put in any of your aircon, for example, any features and fittings that you put into the property, you can actually claim capital allowance, and this will reduce your statutory income. So at the end, your chargeable income would be lower. Right, more importantly is your losses. Yeah, so that's why, all right, we try to set, if you have properties, you want to put that under section 4A in order to reduce your tax liability. Yeah, okay. But generally, if you don't provide MSS, then normally your rental income assessed under section 4D. So katalah kalau you kata benda tu is a rental as a business, mean that it's under section 4A, but if it's just a normal rental, it's under section 4D. Okay. What else do we have here? Okay, maintenance, provide himself. You can ask other people to do the maintenance, right? And then this one, you can look into the public ruling number 14 lah, in order to decide whether it's a 4A or 4D. Okay, so now we come into our topic, which is the determination of our investment holding company. As I mentioned earlier, there are two criteria. Number one is that main activity is the holding of investment and, all right? So you must make sure that, okay, you have number one first, then only test not less than 80%. All right. So let's look at the example here. Jordan Lee Investment started business in 2012 and its main activity, right? Main activity is investment in several companies and fit them. So it's clearly mentioned that the main activity is investment, right? Investment in several companies and fixed deposit. So kalau investment in several companies means that you buy shares lah in other companies, and you also have fixed deposit. All right. And for the year, you only receive dividend income from the investment and fixed deposit interest. So you close the account 31st December. In this case, the company is an ISC. Why? Number one, because main activity is investment holding. Number two is that because income mainly, in this case, you only have income from dividend and fixed deposit. So it means that no other income. So 100% is income from your investment holding. So in that case, all right, you want to look for anything which is 80% or more. Yeah, dia kata more or, hold on ya, ayat dia apa? Not less than. So dia kena not less than, dia tak boleh 80%. Dia kena more than 80%. Yeah, so the law says it's not less than, so must be more than 80%. Is that clear? Yeah. Example 2, we have Sawit Sdn Bhd started in 2011. Main activity, okay, look at here. The main activity is oil palm plantation. But apart from that, Sawit invests in several companies. So it means that dia ada investment juga. Right, investment in several companies and also have a fixed deposit. So in the year 2014, the company received interest of 10,000 from fixed deposit. The company has not generated any other income. So in that year, all right, the income 100% is from fixed deposit. Okay. My question is in this case, Sawit Sdn Bhd, is Sawit Sdn Bhd an investment holding company? Anyone?
I think no,
Why?
because the main activity is not
Yeah.
investment.
Holding. Yeah, because remember the first criteria must be main activity must be investment. So in this case, the main activity is oil palm plantation. Even though 100% of income is from fixed deposit, but that does not fulfill the first criteria, which is main activity must be investment holding company. Yeah. Okay. Example 3, we have Pelaburan Mekar. Main activity is holding of investment. All right, and then receive dividend income. Then apart from them, also receive management fees. All right. So what is a management fees? So in this case, the main activity is holding of investment. Hold on, yeah. Okay, holding of investment, and then you receive management. So what is a management fee? Management fee is income where you charge your company that you manage. All right. Most likely, normally investment holding company is the parent company. Yeah. When the parent company, so you have many subsidiaries. All right. It means that you may have invest in those subsidiaries. And then you impose management fee on each of the subsidiary for managing the company. Right, so that's why namanya management fee. Sometimes company tak buat apa-apa pun. Right, so they impose management fee from each company. So to the parent, they are the management fees. So management fees is always income under section 4F. Can you remember that? Management fee is income under section 4F. It's not investment, yeah. And then close account 31st, in this case, the main activity is PMSB. It's not an IC for the year assessment since income from holding of investment is less than 80% of its gross. What happened is that, what you have is that your income is from dividend, which is 10,000. But your management fee is 20,000. Total is 30, isn't it? But how much is the investment? You want to say investment is 10 over 30 berapa? It's about 30%, kan? Do you have that? 80%? You don't have.
No.
So, bila you tak ada 80%, that is not an ISC. Even though main activity is holding of investment. So far you get the idea. You must have both main, but you also must have the 80%. Right? You have example where you are main the main is investment, right? And then you main is not investment, that your income is 80% or more. So in this all this example, you must make sure that you have main activity is a holding of investment. Number two, you have income from the investment made up 80% of the total income. Okay. All right, an additional criteria to determine ISC is that amount of gross income from a business of holding is not computed as gross income from the holding of investment. Therefore, only income from interest and dividend of the ITA and rental under section 4D are computed as gross income. So it means that in order for you to decide ISC, the 80% part, you only take income from section 4C and 4D. So it means that sometimes you do have rental income. You have two parts of rental income. One is rental income under section 4D, where you do not actually provide the maintenance support service, but you also have income under section 4A. So if you have many properties, all right, sometimes some property you provide MSS. The other property you do not provide MS. That's why you can have income, rental income under section 4A and section 4D. Do you get that? Yeah. So when you have that, it means that for you to compute ISC, you only take your rental incomes from section 4D. All right. So in this example 4 is very good. All right, because it shows you that. All right. For example 4 here, it shows you many scenarios. We have 5 companies. Company A, B, C, D, and E. All right, and they give you scenario. For example, here, company A having a rental under section B, a rental which is a business. So this one is section 4A, right? Non-business rental is section 4D. Oh, dia jadi dah. Dia tak boleh lama lah. C, and what is management services?
F.
Pandai. Alright. So now what you do is that the law says that in order for you to decide whether 80% or not, you only take income of the rental here. Alright. The one for C and for D only. Okay. You do not want all other than that. Alright. Because this one is the one that you want to look whether what is the proportion of your total gross income. If the proportion is 80% and above 80%, then the company may be an ISC, provided that the main activity is investment holding company. All right, so let's look at company A. Company A total gross income, all companies A, B, C, D, E, gross income is 100,000 total gross. Yeah, but the scenario is different whereby company A, the C and D is only 15,000. So that's why the percentage of income from holding of investment is only 15,000. Nampak tak? Okay. But because it's 15%, even though the main activity is investment, so the company is not ISC. Second company, company B, total income is 100, but investment here you have 80,000. Oh, kat sini bagi pula. So maknanya dia 80 and equals lah. 80% dia bagilah pula. Yeah. So company is ISC. Company C is also ISC, 75, 10 and 5. So means that for company A, B, even though you do have your rental income, but because it's under section 4A, you do not take that as part of your investment income. Yeah. And then company D, all right, the total is 250,000, so it's only 50%. That's why it's not ISC. Company E, 30, 20, 20 is 70. So again, 70% is not ISC. So from this scenario, all right, you should be able to identify whether you fulfill that 80% or not. And remember that for this, you have to make sure that you identify whether the rental income is under section 4A or 4D. Yeah, so this one is D. Okay. So far, are you okay? Still breathing?
Still, doctor.
Am I too fast? But if it's okay, you can watch the video later, right? If you think that I'm too fast, but I know that even though you watch video, you will you speak to I tahu 2 times, right? Because I tengok my daughter semua buat macam tu. When you watch the video, recorded video, you at 2 times, right? So that will save your time lah. Okay, so far so clear, yeah. So that's how you determine your 80% portion. All right, and then company on top of that, it says that in this 6.3, it says that if a company is a non-ISC in a year, but gross income from rental decreases in the subsequent year or years of assessment due to temporary cessation of tenancy because of the following. All right, repair or maintenance, absence of tenant or legal injunction. So what happened is that, all right, in this case 6.3, what it's trying to say is that, right, in 6.3, it says that you are a non-ISC, all right. Why you say non-ISC? Because you don't have, means that your investment income is less than 80%. Okay, so in this case, assuming that the aim, the business main activity is ISC, but the income from investment is less than 80%. Do you get that? So what happened is that, so this company, you have income from rental, all right? You have the rental 4A and you also have rental from 4D. The issue here, the company is not having 80% because the 4D over gross, for example, 4D and 4C over gross is less than 80%, right? Because you only take 4C and 4D. So what happened here is that it says that the company, all this one must be ISC, but suddenly because what happened here is that you punya income will reduce because of this reason, all right? Because of repair or renovation, absence of tenant for a period of 2 years, right? So they give you time 2 years or any legal injunction, all right, or any other circumstances. So the company is still deemed to be non-ISC, right? For the subsequent year of assessment, even though, all right, even though income is not less than 80, means that income from the 4C and 4D is more than 80%. So let's look at the example here. Okay, look at here. Okay, because I draw this line. Okay, the year 2010, all right, the company is non-ISC. Why? Because you punya investment income is only 40% out of 100,000. Okay, your rental income 2010 is 60,000. Year 2015, 50,000 and still non-ISC because why? Because 50 over 100. But later you see that your total income dropped to 30,000. All right, means that your business income dropped from 50,000 to 30,000 and 2013 dropped to 10,000, but 2014 now increased balik. Okay, so what happened? Because in 2012, right, the plane was not let out for a few months due to repair. So the repair here, it fulfilled the criteria mentioned above lah. Right, because of the repair, that's why there's no tenancy. So that's why your income from rental business drop. So bila kat sini drop, right, so it will affect you punya total gross kat sini. Nampak tak? Gross pun drop lah juga. So what happened is that because you punya denominator sekarang ni, assuming that all these, right, you have 60,000 over 90,000. So ada 67%. Okay lah, this one clear lah because this one is below 80%. So 2012 the company is not ISC. But in 2013, you look at here, you have 60,000 but total income dropped to 70,000 because why? Here drop. Okay, so means that your denominator is smaller. Alright, so bila 60 over 70, now you have 86%. So remember that just now we say that if you have more than 80%, then the company become ISC. But then this is an exception. Why? Because the company having investment income 86% because why? There's a drop in your rental because of the repairing reason. It said that in 2012-2013, business income dropped because repair. So bila dia repair, that's why it become 86%. Even though you 86%, the company is still non-ISC because why? Because they fall under this exception. So kita panggil sini exception lah. Kalau you have this exception, alright, so you won't be fall under ISC. Yeah, but in 2014 the company goes back to 42% because now dia dah jump. Bila 70% naik kat sini pun you punya total gross income denominator is higher, 120,000. So now it goes back to 42%. Alright, so it's just that in 2013 you are not ISC even though you punya percentage is more than 80%. Alright, question for this? Are you clear?
Doctor,
Yes.
is it only eligible for if the business income is rental?
What about others? What about others? Contohnya apa?
Maksudnya kalau business lain dia punya income drop, tak dikira lah.
Line drop sebab ada business line drop sebab dia repair or renovate. Tak boleh. Tak sabarlah kan. Katalah you business jual bakery ke contoh, right? For example, you are selling of any retail shop ke and then business drop. But you're talking about the income from the business drop. But because we say that repair and maintenance, it doesn't make sense because that will not affect. It will affect your business income, sales for example. But you really have to, but this one is more of the rental lah sebab dia kata gross rental kat sini. Rental, business of holding of investment. So business of others will not fall into this. You get that?
Okay, thank you.
Okay, thank you for your question. Alright, and then another example is that in this case, dia kata, alright, rental income from business derived from letting out of office lot, and then tenancy agreement ends and the company only managed to get new tenants. So remember that just now we talk about the exception here is that you are the 2 years of no tenancy, right? So in this case, it may have applied to this company where you only get your tenant in 2014 here, right? So mean 2012 and 2013, there's no tenancy. Remember that you are talking about you're letting out of office. So maybe it's not everything is kosong, yeah. So it means that it could be some of the properties or the offices maybe left out, especially now COVID ni, banyaklah issue because why? People are no longer renting the premises, alright, because they don't have enough business to cover for the rental expenses. So what happened here is that because remember that these no tenancy fall under the exception. So in this case, similarly, alright, you see that the dividend income here, alright, 90, 90, 30. In this case, total gross 3730, so you have 57, no problem lah. But when it comes to 2012, remember that this one dropped because why? There's no tenancy. 2012, 2013, all right. You have 82%, but remember that even though ISC, and in this case more than 80%, all right, the law gives you exception that you will not be assessed under ISC. Okay. Why is it so important for you to given a chance, all right, for income tax purpose? Given a chance, you do not want to be categorized as ISC. All right, you will try not to be assessed as investment holding company from income tax perspective. Why? Because the tax treatment is not, it does not give advantages to the company as compared to a normal company. So that's why if in this case, for example, you do not want to be assessed as an investment holding company, that's why we give you exception. All right, in this case, even though income is more than 80%, we do not put you under ISC, right? But yeah, that's good lah. You understand this? Example 6. Okay tak ni? Right, even though, yeah?
Okay.
Okay, yeah, because this one, even though more than 80%, but the reason being because of no tenancy in the business income, so that's why your total gross kat sini reduced, so that will give rise to the percentage. But still, you are not ISC. Same facts, is just that you absence of tenancy. Okay lah, right? Okay. Okay, let's look at NASA. A company which has been determined to be an ISC in the basis period is deemed to be ISC in the subsequent year. However, the treatment is not applicable if the company is able to prove that it's no longer ISC in the relevant year of assessment. So what happened here is that assuming that in the first year 2011 you are already an ISC, we'll always assume that you will continue to be ISC. Unless, all right, you tell RB, okay, no, this year I am not ISC because my computation is like this. Number one is that goes back to your aim of the business activity, the main principle. Number two, you must show the 80% computation, right? In this case, Syarikat NASA comments in 2011, main activity is holding of investment. Okay. In 2012, sold all investment except fixed deposit and use it to start a business of selling of hand food. Right, in 2000 activity and its main activity. So means that in 2013, main activity is no longer IC, yeah. So first criteria you avoid. Right, in 2013, you are no longer ISC. So even though you continue to invest in several other companies, but still remember your main activity is selling of hand food. No longer investment holding company. So even though you do have, in this case, you don't have to test pun sebab you punya main activity is selling off handphone already. Okay. So kalau you test, katalah you test ni dah di berapa? 25 over 55. 25 over 55 you akan dapat 45% pun. Ya. The second year pun dapat, okay, the 2014 you have 30 plus 24 plus 15 over 79. Right, by right here you have 87%. Right, but you are not ISC because why? Main activity is selling of handphones. Okay, okay, so I hope that is clear. Number one, you must check first whether the company is ISC or not using the formula that I have gone through. Okay, number two, now you have decided, okay, the company is an ISC. Yes, question. Okay. Okay, now let's go into question. Tak ada. Okay, now let's go into the tax treatment. All right. So remember that I told you that once you know that company is ISC or not, then you have to decide whether company is listed or not. Okay, so once a company is listed or unlisted, then you have to apply the respective tax computation. So normally, all right, so when we talk about unlisted company, we are going to look into section 60F. But a company listed, then you look into section 60FA. A ni maknanya new lah, amendment punya. Right, this is the new law. Before this, they don't give the difference between listed and unlisted, but now the tax treatment for unlisted and listed ISC is different. Okay, what happens? So let's look at the tax treatment. I mentioned this one, 60F for not listed, and then you have the listed company. So the difference is 60F and 60FA. Okay, tax treatment. Okay, let's go into the not listed first. Yeah, all right, 60F. It says that any income derived from the holding of investment, which is interest, dividend, rental. All right, and kelas pukul berapa ni, Sufi? Alright, any income derived from holding or investment and rental, whereas income other than income from holding and is treated as a source of income under section 4F. So it means that if you are not listed, then all your income will be assessed under section 4C and 4D and 4F only. Even though you have rental, alright, you have rental. In this case, you have two types of rental income. This one is section 4D, right? But this one is section 4A because business. But everything will be assumed as section 4D. Yeah. So you say that same fact as example 4, assuming all company A to E are not listed based on the definition of ISC, B and C are ISC. So mana example 4 tadi? Ingat page balik example 4. Okay. Example 4 ni kita akan tengok datang balik banyak kali. Yeah. So you know that this company B and C is a ISC company, and assuming that the company A, B and C is not listed, then you have to apply. So assuming that these are the income, alright, company B and C, B are the rental from business, alright, and then they are the dividend income and interest income. So how are you going to do the tax com for company B and C? So that's how you are doing it now. Okay. So you say that based on the definition of ISC, company B and C are ISC. So and then for company dividend and interest are assessed as income under section 4C, whereas rental non-business and rental from business assessed under section 4D. Management fee will be assessed under section 4F. Okay, that's how we do it. Okay, so it means that now you have your, for example, company B, right? Company B. Even you have your rent, section 4C is from dividend, interest, and then your section 4D, you have your rental, which is with the management support and service. Even though you provide, because it's unlisted company, you are going to assess that under section 4D. And then you have another rental, which is without, all right, without MSS. So all this will be assessed as your income. And then, all right, you also have income under section 4. I'm sorry. Yeah, you have management fees. Yeah, under section 4F. So then you have your aggregate income. Right, then you have your aggregate income. Aggregate income. Okay. Alright, for company B and C, dividend interest, management fee will be assigned under 4F. Okay, then it says that now you have to compute your permitted expenses. So remember just now I said that ISC is not a preferred option from tax perspective. Why I say it's from tax perspective, later I'll explain to you that why is it so important for company to have an ISC. Yeah, so maybe you can check YouTube also the benefits of being an investment holding company. All right, but given an option, you do not want to categorize your company as ISC because why? The limitation. All right, and so it says that an amount of permitted expenses determined in accordance with the prescribed formula is allowable as a deduction against your aggregate income. So it means that for ISC, all right, what expenses that you have is given as a deduction against your aggregate income. So your permitted expenses, all right, your restrictions. So if this is the expense, these are the only deduction given to you, all right, in arriving to your chargeable income. Yeah. So even though you may have expenses incurred for every of these income, all right, for example, rental, all right, you are the rental income, and you may have expenses, for example, quick rent, repair and maintenance, all that expenses related to your rental is not deductible. All right. Even though interest, for example, you have interest income, and then in under that you also have your interest expenses, so that is also non-deductible. Okay, right? So that's why I say that the option of having ISC is not that it's not it's not that lucrative lah, right? From income tax perspective. Because why? Whatever total income here, you are given to deduct your permitted expenses, and this one is the restricted. Alright, ada lagi perkataan, not only you only allowed to minus PE, but the PE is restricted. So how are you going to compute your PE? Okay. Your permitted expenses only consist of director's fee, wages, salary and allowances, management fees, secretarial audit accounting fees, telephone charges, printing and stationery costs and postage, and rent and other expenses incidental to the maintenance of an office, right? So it means that it's not expenses incurred for in the source of income, right? But for you to manage, namanya manage the income. That's why, for example, a company may have a director's fee, all right, because they need a director, right? They need to pay wages for their employees, salary and allowances, and then they may have to incur management fees. Yeah, management fees is deductible, right? Remember that tadi you had the management income, now you have management fees. Then you have secretarial, audit and accounting fees, telephone charge. All these expenses are what we call office expenses. Yeah, office expenses. Rental, not even traveling is not there, right? They don't have depreciation, tak ada, nothing. Yeah. So and then the prescribed formula to determine the amount which is permitted against your as a deduction, then you kena pakai pula A times by B over 4C. Alright, not only the expenses where A is actually the permitted expenses, so all this is your A. And then it's not that whatever you have here is deductible. No, it's still restricted to B over 4C. What is B? B is the gross income consisting of dividend, interest and rental chargeable to tax for a basis period, and C is the aggregate of the gross income consisting of dividend, interest, whether exempt or not, and rental and gain. Okay, ni ada bunyi ya. Ada kat sini ada perkataan ni. Gain from realization of investment. So dia ada tambah satu. Alright. Prior to 2014 ni tak payahlah sebab you no longer use that lah. Okay, so don't worry about that. So you don't have to read that because you don't want to confuse yourself.
It's 1 o'clock.
Right? Okay. So and then don't forget ya, A times by B over 4C, ada 4 pula ni. So 1/4 of this. So it means that, alright, the expenses given to you, right, is very small. Alright, the deduction given to you in arriving to your chargeable income, this one permitted expenses ni, right, the amount allowed is smaller as compared to the actual permitted expenses. right? Whatever it is, you get less than 1 or less than 100% lah, right? So what is B, what is C? So in B, it says that, and then ada lagi. And the amount allowable as a deduction should not exceed 5% of the gross income consisting of dividend, interest, and for that year. All right, so this one is actually your dividend, interest, and rental for the basis period. Right? So dia kata 5%, and then dia ada lagi restriction, and then you have to compare that whatever you have here versus 5% of B. Yeah, 5% of gross income consisting of dividend, interest, and rental for that basis here. Right? And please remember that this dividend here include distribution by a unit trust. Okay, so it shows you dividend. How much time we have? We have finished. Okay, I want to stop here because I want you to look into the example and try to digest whether it makes sense or not. Of course, it makes sense, but it's just that it's not that direct. All right, I will continue example 10 in the next class, but I hope that by then you have actually reviewed this public ruling. You have read the public ruling first, and then when we discuss in the next class, then you have question to ask me if you don't understand that. Yeah. So in this case, okay, betul lah, right? This one is B and C. So this one is B. So 5% of B. So in this case, you have to look at kat mana tadi saya cakap tadi. Ni you kena ambil versus A for B for C, whichever is lower pula tu. Nampak? Kesian betul lah ISC ni. Whichever is lower. Okay? So I think I stop here. Any question? This,
Doctor,
sorry?
why does the IHC has so many restrictions in terms of its tax computation?
Because the business is very easy, you know. The business is just holding our investment and you get money. It's a passive income. Right? You just hold investment and you get money. Of course, I kata, you bukannya active income. Not like a normal business where you have to work for it because it's an active income. You have to work for it in order for you to generate business, to generate income. Yeah. But I see you just property. You just rent out property and do some management fees, everything. Then you dapat income. So of course, IB want to get as much income from this very easy money. Right, and they know that you don't have to work so hard on the passive income. Yeah, so that's why we say that from income tax perspective, ISC is not an option. It's not a good option. But all right, later you see that if I were to invest in property as an individual, right, I will have a lot of constraints. Especially, for example, property. If you want to invest in property, normally you need bank loans, everything, right? So that's why rather than being an individual, rather than being an enterprise, rather than they create investment holding company. So bila you ada investment holding company, then it's easier for you to run business of holding investment, right? So that one you can watch actually other lah, yeah. So I stop here first because it's already after 1 o'clock. Please read the public ruling, right? And we'll come back on the same topic next week for 2 hours. I hope that I can finish. I don't think I can finish in 2 hours. I may be able to finish, but we may not be able to do the tutorial. So I may need extra 1 hour on Sunday to finish this topic ISC. It's more challenging topic, all right? But I hope that we'll go through it smoothly, yeah? So with that, I thank you for attention. Please give feedback on this topic, and please, I'll share with you the recording later, and please watch it again. Yeah, with that, Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Thank you, Doctor.
All right.